5 cryptocurrencies are about to replace every bank on earth. And no, I'm not exaggerating. Your bank charges you to hold your own money. Takes 3 days to move your own money. And your government? It prints more of it every year, making whatever you've saved worth less. Banks have had 600 years to fix this. They didn't. Crypto did it in 15. Here are 5 coins, 5 use cases, 5 reasons your bank is becoming a fax machine. And if you work in banking, I'm sorry, but you need to hear this. Use case 1. Stablecoins. Imagine the US dollar, but on a blockchain. 1 USDT always equals $1. No volatility, no speculation. Just a digital dollar you can move anywhere in the world, in seconds. Now why does this matter? You live in Iran. Your rial has lost 90% of its value in 10 years. Inflation is eating your savings alive. Your government won't let you buy dollars easily. With stablecoins, you convert your rial to USDT in seconds, from your phone, at market rate. No bank, no black market, no government permission. You just opted out of your country's inflation. Legally, instantly. This isn't theory. Millions of people in Iran, Turkey, Argentina, Nigeria are doing this right now. And here's what your government doesn't want you to know. Stablecoins make their money printer useless. Because now, citizens can just leave. Use case 2. Cross-border transfers. Right now, if your uncle in America sends you 10 lakh rupees, it goes through SWIFT, a system built in 1973. Older than the internet. Older than your parents. His bank charges 1 to 2% as transfer fee. On top of that, the exchange rate is marked up 3 to 5%. And it takes 2 to 3 business days to land in your account. Weekends, holidays, forget it. On a 10 lakh transfer, you're losing 30 to 50,000 rupees to middlemen for moving numbers on a screen. Now, same transfer on Tron. Your uncle buys 10,000 USDT, sends it to your wallet, arrives in 5 seconds. Cost? Less than 1 rupee. Same money. 5 seconds instead of 3 days. 1 rupee instead of 50,000. Your bank charges you 50,000 rupees to move numbers on a screen, and you're defending them? Interesting. Use case 3. Smart contracts. A company wants to raise 100 crore by issuing bonds. Traditional route? Investment banks take 2 to 5% as fees. Lawyers, regulators, paperwork. Takes weeks, costs crores in middleman fees. On Ethereum, you write a smart contract. The bond is code, maturity date, interest rate, payment schedule, everything programmed in. An investor in Japan buys 5 crore worth. The money goes directly into the smart contract. Every quarter, the contract automatically sends interest to the investor's wallet. No bank processing it. No delay. No missed payments. On maturity, principal returned automatically. Every single transaction visible to everyone on the blockchain. The investor can see exactly where their money is at any second from their phone. And this isn't some startup fantasy. BlackRock, the world's largest asset manager, $13 trillion, chose Ethereum over traditional infrastructure for their BUIDL fund. When BlackRock picks blockchain over banks, maybe it's time to ask, what does BlackRock know that your bank manager doesn't? Use case 4. Trading at the speed of light. Wall Street's high-frequency traders make millions by being microseconds faster than everyone else. They spend billions on fiber optic cables just to shave milliseconds. Solana settles a transaction in 400 milliseconds. 4,000 transactions per second. Fees? Fractions of a cent. Traders convert their stablecoins to SOL, deploy on decentralized exchanges, execute thousands of trades per second, and settle instantly. No clearinghouse, no T+2 settlement, no broker sitting between you and the market. And here's the part Wall Street hates. On Solana, a 22-year-old in Tier 3 India has the exact same trading speed, the exact same access, as a Goldman Sachs desk in Manhattan. Wall Street spent 50 years making sure that could never happen. Solana did it in 3. And that's exactly why they want crypto regulated out of existence. Use case 5. Store of value. Gold has been valuable for 5,000 years. Limited supply, hard to extract, impossible to fake. No government controls it. Bitcoin has the exact same properties. Only 21 million will ever exist. Mining gets harder every 4 years. No government can print more. And its network has never been hacked in 15 years. BlackRock's Bitcoin ETF, $103 billion. MicroStrategy holds 550,000 Bitcoin. The US government holds 328,000 from seizures. These aren't gamblers. These are the most sophisticated financial institutions on earth. They're buying Bitcoin the way central banks buy gold. And if you think they're all wrong, I'd love to hear why in the comments. So here's the big picture. Stablecoins become the common currency, the digital dollar that flows across every chain. But depending on what you need, you take a different highway. Protect savings from inflation? Stablecoins. Send money across borders? Tron. Program a financial contract? Ethereum. Trade at 4000 TPS? Solana. Store wealth for 20 years? Bitcoin. 5 tools, 5 jobs, 1 financial system that runs 24/7, no holidays, no middlemen, and nobody asking for your permission. If you want to understand the fundamental difference between these coins, how blockchain works, how validators secure your money, go watch episode 1, link in bio. A new financial order is coming. Faster, more transparent, more accessible than anything we've ever had. The only question is, will your bank survive it? Share this with someone who still trusts their bank more than math. And if you think I'm wrong, tell me which bank gives you 24/7 access, zero fees, full transparency, and doesn't lose your money in a financial crisis. I'll wait.